Good morning, traders, and welcome to today's market fundamental and technical breakdown for the time period of January 20th to January 24th, 2025. And my name is Anthony Phillips Njoku, the founder of 10x Digital Lane, where everyone who has a knowledge gap in digital trading can get the right knowledge, get the right guidance, get the right tools to be able to trade this market professionally and profitably. So today I'll be walking you through the market fundamental and technical breakdown for this time period. And how this works is that you first of all check out the technical charts. Check out the technical chart. After we check out the technical chart, then we also talk about the fundamental chart. So don't miss any part of it. Don't miss any part of it at all. Don't miss any part of it at all. Watch to the end. Watch to the end. But before we start, we would dive into the broker we use. To get the link to the broker, is going to be on the description, okay? We use HFM and you trade with the best trading conditions. This is a CFD trading platform for Forex, commodities, bonds, metals, energy, shares, indices, and more, with 1:2,000 leverage, which means that each $1 deposited into an account is equivalent to $2,000. So, and the minimum deposit is $5. So each $5 deposit is equivalent to what? $10,000. That means that you can open a trade worth $10,000 if you open an account worth 1:2,000 leverage. Ultra fast executions, quick deposits and withdrawals, and swap free. You can click over here and register. I'm going to attach a link to a video whereby at the end you can go and watch this video and be able to know how to register on HFM. It's an award-winning broker with good trading conditions, designed from the ground up to suit the needs of all traders from beginners to advanced. These are the best trading accounts in the industry. Okay, so we have the Cent account, the Zero Spread account, the Pro account, and the Pro Plus. Lastly, the Premium account. Okay, so if you want to know more, you can as well dive down to our website www.10xdigitallane.com and you can sign up. This is our official website where our educational content and our official support team and as well our official links are attached. So I want you to dive down to this website, go for the free package or either a premium package to gain access to our materials, to gain access to our platforms, and to be able to experience our services. Just like these guys who have experienced it. Like Anisom Tochiko, good morning, Tony. It's good to hear from you. I have long awaited this opportunity. I am convinced I will do great things with you. You will equally benefit from me. But I assure you I will be a good student. So I will expect everyone to be a good student. Give me their full time and attention. And lastly, if you want to join our free 7 days intensive Forex training webinar, just click on the link tree over here, or you go to Google and search for 10x Digital Lane. It's going to bring out what they call a link tree. On that link tree, you're going to see free trading webinar registration form. This is just a 7 days intensive training and it's free. You'll be learning some in-depth knowledge about the Forex market and you'll be able to get a basic ground knowledge about it. Okay, so you can as well visit our store, our seller store, to grab our book, okay, and become an athlete as well. You can become an athlete for our company, whereby any referral you bring into the business, you get a commission. Schedule a Zoom meeting with me whenever so that I can be able to break down more information to you. So let's dive down into business. So starting off this week, we're looking at DXY, the strength of dollar. And from here, last week, we told you guys that I have a sell zone on dollar exactly at 110, okay? 110 price. So the market got to that point and then there was a reversal. Dollar started falling massively. So for this week, I expect dollar to have one push up into this supply zone over here. And after this push up, we're expecting a drop on dollar. Okay, one push up. And after this push up, we're expecting a drop on dollar. Monday, and market is currently pushing. Once it gets into the supply zone and we see a change of character, we're going to sell. So that's it for dollar. The next is Euro USD. Euro USD is 80% correlated with the dollar. So it does opposite of whatever the dollar is doing. So over here on Euro USD, we expect Euro USD to come down towards the demand zone over here. And after it does that, we'll be pushing to the upside. Okay. It's going to come down towards the demand zone because there are some orders that was left here last week when the market had this up push. Okay. So we expect market to come back into this demand zone, fulfill those orders, and then push the upside, capable of breaking this high and also heading towards this high. Okay. So that's what you see. So the move could be massive as at this. Okay. So let's watch out for that. Then the next on our list is AUD USD. AUD USD is similar. Okay, it's a dollar traded pair. It's a dollar traded pair, and we expect AUD USD to also have a downward push towards this demand zone over here. After it gets towards this demand zone, then we expect it to move to the upside. Okay, this is the target, this demand zone, a downward push to create the weak low. After it creates the weak low, then it will now push to the upside towards the supply zone. Okay, this is the supply zone that we're expected to head to, but instead last week it just head to the daily supply zone and it has not fulfilled efficiency in the 4-hour supply zone. So we're expecting to still get towards this supply zone. So down push for AED to create the weak low as well, grab some liquidity inside the demand and then push up. Then the next on our list is GBP/USD. GBP/USD is similar, but GBP/USD I doubt much down push on GBP/USD because as at last week it closed inside the demand zone for last week. So just a little push down, then a push up. So that's what we see. Okay, this is the supply zone I might head to next. Okay, once it breaks this supply zone over here and over here, it will be heading towards the supply zone next. Okay, so for GBP/USD into this zone and then a push up. Then next on our list is XAU USD. XAU USD. So for gold, we expect gold to come towards this supply zone, which it has right now. Okay, there was a high that was taken last week. Liquidity was taken from this stop last week. Okay, so since liquidity, okay, it has not been taken yet, but one thing I see for gold is that it's going to drop to the downside from this supply zone over here. There's going to be a massive drop on gold to the downside. So as at yesterday, I marked up my chart. I was expecting when the market opens up, there's going to be a massive drop or a push up and then a drop. So this is not valid anymore. So currently, gold has opened, the market opened over here. So there is a push up now. You can see there's a push up going on. So we're going to be looking for our sales within this supply zone. And once we see a valid sell within supply zone, the market will be pushing to the downside. So that's what I see for gold, XAUUSD. Why is because Trump is going to be inaugurated today, the 20th of January 2024. And when that happens, I'm anticipating dollar to get more weak. And then if that happens as well, gold should lose some strength. And in that case, that's just what I see. Okay. Because there has been an overbought situation on gold as well. There has been an overbought situation. But overall, this is just a corrective structure because the prevailing trend on gold is a buy. The prevailing trend on gold is a buy, okay? On daily or weekly is a buy. Just more like a corrective structure. This sell I'm expecting here is more like corrective structure because if you can see, gold has been creating good upwards structure, okay? This is impulse, correction, impulse, correction, impulse. There needs to be what? A correction. So is that correction we're trying to trade before we can now start talking about the next impulse because the market is literally on an uptrend. Okay, so with that in mind, the next on our list is BTC USDT. BTC USDT. So for BTC USDT, it just created an all-time high this morning, $109,000. Congratulations to every holder. So for BTC USDT, my target is it's going to break this high, this liquidity, which it has already done this morning. Congratulations to everyone who was holding. So if you can see, we had a descending wedge. This was a descending wedge. So what did the market do? The market broke the descending wedge. After it broke it, it came to retest over here, and now it is shooting to the upside. That's exactly what the market did. Okay. So the strategy to enter a descending wedge is once you spot the first candle that broke this is where your entry is meant to be. The first candle that broke it. This is the candle here, this candle. You can see if you miss that entry, Bitcoin still gave us that entry yesterday evening, and now it's moving to the upside. So the target right now, as it is moving to the upside, is $115,000 to $120,000. $115,000 to $120,000. Ultimate target is 120. I've heard it from multiple analysts and multiple channels. So it is $120,000. Congratulations to every Bitcoin investor. We are currently in a new all-time high. This is the time, $120,000. Okay, so with that said, let's dive down to the next segment. The next segment is the fundamental analysis. How this happens is that we trade the financial market, and what we trade is two pairs compared to each other, like Euro USD. Whenever you're placing a buy on Euro USD, that means that you're buying Euro and you're selling dollar, expecting Euro to be what? Strong and dollar to be weak. Okay. And we're trading off the fluctuation of price. So over here now, we're trying to understand which news event would affect a particular currency to make that currency to become way more stronger or weaker. So that's what we're trying to figure out. So the inauguration day, that's for the President Trump, is happening today by 6 p.m. West African time. So you can watch it on any news platform. You can watch it on YouTube as well. Just search for Trump inauguration day. A lot of high figure individuals, prestigious individuals will be coming, like the world richest man, currently the first man to hit $400 billion net worth. Elon Musk will be coming there, and Barack Obama will be there, and many other individuals. So watch out for that at 6 p.m. Then on Tuesday, when we're done, no other news events. The world's attention is on today, Trump's day. Today is just Trump's day. Okay. No other news event today. Nobody is focused on any other thing. Everybody is just focused on Trump today. Then tomorrow, which is Tuesday, that's when trading starts proper. That's when the market stabilizes and starts proper. Okay, so Tuesday, January 21st, we have the unemployment rate on Great Britain pound early in the morning by 8 a.m. Unemployment rate. And unemployment means that there is a lot of people in an economy that don't have work. Okay, so the previous data was 4.3%, and currently analysts are saying that it might increase to 4.4%. You might be seeing an increase of 0.1% as little, but think about it. We're talking about the whole Great Britain, the whole Great Britain here. If the population of Great Britain is, let me say, 20 million individuals, do the calculation of 0.1% of 20 million individuals, it can come into the thousands. Okay. I'm just speculating on that figure, 20 million. It can be more. Okay. So this is very important. If there is an increase, like analysts expect, it's going to make Great Britain weak in the morning by 8 a.m. So watch out for that. If this news turns out positive, like 4.4%, Great Britain will be weak. But if it turns out negative, like we get 4.2 or 4.3, okay, by 8 a.m., Great Britain will be strong. Then we have the climate cost change. Then we have the employment change, okay. This is all a derivative of the unemployment rate. Everybody's attention will be on the unemployment rate, okay. That's what everybody's attention will be on, this unemployment rate, because all of them are coming out by 8 a.m. But everybody's attention will be on the unemployment rate. Then we have by 11 a.m. the economic sentiment in Germany. Economic sentiment has to do with what people who live in Germany perceive for the future of Germany. What people who live in Germany perceive for the future of Germany. Do they see the future developing? Do they see improvements coming in? Do they see households making more money? Do they see themselves investing in more? Or do they see the pessimistic part of it? Do they see things crumbling? Do they see high inflation coming in? Do they see lack of development and growth in the economy? That's it. So if there is a positive sentiment, Euro will be strong by 11 a.m. If there's a negative sentiment, Euro will be weak by 11 a.m. So the previous figure is 15.7. Analysts are saying that it will come down to 15.1, which is bad. But if you get a figure like 15.8, 15.9, or anything higher than 15.1, euro would be strong. Okay, euro will be strong. And we already analyzed euro dollar. So this could be the trigger we needed to buy euro dollar for the week. Okay, so watch out for it. Then by 2:30 p.m. West African time, we have the Canada inflation rate year over year. We have the Canada medium year over year and CPI trim mean year over year. This CPI median year over year is a derivative of inflation rate year over year. CPI trimmed mean year over year is a derivative of inflation rate year over year. So everybody's attention will be on inflation rate. And like I said, Canada is one of the balanced economy right now. To be honest with you, it's one of the balanced economy right now out of all the economies in the world. Why? Is because their inflation is under control. Every central bank in the whole world, the central bank in US, central bank in London, central bank in Europe, central bank in Africa, their target is always to keep inflation at 2%. Currently, Canada's inflation is at 1.9%. So their central bank is doing very well with their resources of oil and developments that is going on there. Okay, so now analysts are saying that this inflation can reduce to 1.7%, which means that the prices of products and services are not going higher. Things are not getting more expensive. Instead, things are being controlled and curtailed at the price it's meant to be. And discounts are now being offered by businesses so that they can get the customers to come in. This is the period in Canada where you'll be getting a lot of discounts. They'll tell you, okay, you want to buy land or property. And since the inflation for December was 1.9%, the land or property is 50,000 Canadian dollars. But since inflation has been reduced to 1.7%, the company will reach out to their clients, hey, we're offering a discount, 20% discount, 20% discount, because they understand the metrics. They understand because they are still going to make the money off from that property because inflation has dropped. That's how businesses work when they offer discounts. They work hand in hand with the inflation figure announced every single month by the Central Bank of Nigeria. And as well, Central Bank implements policies to make sure that this price is stable or controlled when it is out of control. So that's it. So we'll be watching out for that. If this figure turns out to be true, 1.7%, then Canadian dollar will be weak. Any currency that the inflation rate is low, the currency turns out to be weak. But any currency that the inflation rate is high, the currency turns out to be strong because investors will be investing in those currencies, expecting for their assets bought in those countries to appreciate. Inflation is the increase in the price of a particular product or service. So investors are looking for where they will put their money so that whatever assets they buy there will appreciate massively. So when there's high inflation, investors are interested. When there's low inflation, investors are not interested. It will make Canadian dollar weak by 2:30 Tuesday. So watch out for that. Then no news on Wednesday at all. No news at all on Wednesday. So the next is on Thursday. Starting off on Thursday, we have by 12:50 a.m. the balance of trade for Japan. Balance of trade, it has to do with the total imports minus total exports. And Japan is known as the largest trade zone in the whole world. Okay, so their exports are always larger than their imports. And if that happens, Japanese yen will be strong by 12:50 a.m. So what analysts are saying is that December, they had minus 117.6 billion yen. Now, analysts are saying that there is a figure of minus 55 billion yen, which is the export that they did is massively greater than the import than the import that they did for just that period of November to December, which is highly possible because that was festive period. So if that news turns out positive, Japanese yen will be strong on Thursday, 12:50 a.m. West African time. No news for London session on Thursday. We just dive down into the New York session by 2:30 p.m. We have retail sales month over month for Canadian dollar, retail sales year over year for Canadian dollar, and retail sales ex-auto month over month for Canadian dollar. Every analyst will be way more focused for the retail sales month over month, retail sales year over year. I can see over here retail sales month over month for December as well. This is also retail sales month over month for November. So what this means is that the way they have retail stores where they sell a lot of retail products, okay? Think about the stores close to you, the malls close to you. They keep track of their retail sales every single month because they use that to be audited, pay taxes, and uh, be able to get revenues to pay investors if they are investors who invested in such businesses. So these retail sales month over month now, if there is an increase in retail sales, it is good for the Canadian dollar. If there's a decrease in retail sales, it is bad for the Canadian dollar. Over here, analysts are saying that they had 0.6% in October, and now in November, they're expecting it to be 0.1%, which is a drop of minus 0.5%, which is very, very poor. If this happens, Canadian dollar will be weak by 2:30 p.m. West African time on Thursday. But here on the year over year, most times people respect the year over year more than the month over month because month over month is highly volatile and fluctuates very well. But year over year is more like you checking last year, 2023, November against this year, 2024, November. This is November figures, okay? And this is the data we'll be trading off. So analysts are saying that in 2023, November, there was 1.5% retail sales for a shopping platform, like let me say ShopRite, okay? So for November now, 2024, they're expecting it to be 1.6%, which is an increase of 0.1%. It might look little, but if you think about the millions and billions that they trade in these platforms or this shopping complex, it's a big figure. So if that happens, Canadian dollar will be very, very strong. Then on Thursday as well, we have jobless claims, 4-week average, initial jobless claims for dollar and continuous jobless claims. Everybody's focus usually goes to the initial jobless claims. Initial jobless claims are people that just filed newly for the US government that they don't have jobs anymore. They just lost their jobs, okay? So in the United States of America, if you don't have work, you can file a complaint to the government. Government will pay you stipends, but it is not as enough as you getting a job. Okay. So over here, they're saying that analysts are saying that the initial jobless claims for last week was 217,000 people did not have jobs. But right now, they're expecting to reduce to 215,000 people. If that happens, dollar will be strong on Thursday by 2:30 p.m. Then the jobless claims 4-week average are people that has been receiving jobless claims benefits for the past 4 weeks. Okay, because this particular filing, you need to renew it consistently so they keep track of this data. So over here, they're saying that it was 212.75K last week, and then right now they're looking at 213K. 230, which is an increase. If this happens, dollar will be weak. Then continuous jobless claims for January 11th, from January 11th to now, this week, January 23rd. This is now 1,859,000 people. 1,859,000 people. And then they're saying that it will increase to 1,861,000 people, which is quite high. If that happens, dollar will be weak. So watch out for that because this news is always reported every single week on Thursday. It is reported every single week to know the strength of the job market in the United States of America. Then to wrap up the day by 11 p.m., we have the Australian dollar Judo Bank Service PMI. It has to do with the service sector in Australia, okay? And this PMI means Price Manufacturing Index. So it has to do with the amount of money spent in the service sector, okay, to be able to offer the services by Judo Bank. So this Judo Bank is people that analyze this figure. They analyze it. So they're saying, okay, the industries that offer services, what is the increase or decrease in the current process of them offering services? And also they have the manufacturing PMI. They say the industries that manufacture products, what is the current increase or decrease in the process of producing the particular product they are producing? That's just what this means. The Judo Bank Service PMI and Judo Bank Manufacturing PMI. Okay. So if there is an increase, it's just like inflation, but in the aspect of companies. Inflation, CPI, is in the aspect of a country. This particular service PMI is in the aspect of companies. Okay. So if they're saying that the figure before was on December, it is 50.8, and they're saying that it will reduce to 50.6. Okay. If this happens, Australian dollar will be weak. If this happens, Australian dollar will be weak because the stocks of those companies will reduce because investors will not be interested that much. Okay. Because of inflation is not going on within those sectors. So over here now is the Judo Bank Manufacturing PMI. For December, they said it's 47.8. And yeah, for January, I think it's 48.3, which is good. If this happens, if we had a higher figure, it's going to make the Australian dollar strong. So right now, we have a neutral ground until 11 p.m. West African time on Thursday. We will then figure out why and figure out what. Okay. Then the big news for the day, the big news, everybody's attention has been on this news since last week, Friday. Inflation rate for Japan, year over year. Okay. So inflation rate has been curtailed by Japan for a very, very long time when they had negative interest rates. There was a time Japan had negative, but once their inflation started increasing for some factor, one or two factors, now they're saying that inflation is 2.9% in Japan, and it's likely to increase to 3%, which is out of the CBN, the Bank of Japan's targets. They are meant to always keep inflation below 2%, but right now they are 3%. So if this happens, Japanese yen will be strong. A lot of investors will buy Japanese yen against the Great Britain pound, against the euro, against the dollar. Then we have the interest rate decision. Interest rate. So there has been a lot of news that interest rate to be hiked. Interest rate to be hiked. Like I told you, interest rate is a mechanism the central bank used to control inflation, controlling the circulation of money in the economy. So if there is high interest rate, it will be very, very expensive for you to borrow money from the bank. Okay. Businesses will lack borrowing money from the bank. Even if you borrow, you're paying with high interest, just like my country right now. You pay close to 27% interest. So if you borrow 100K, you're paying back with 27,000 naira. That's interest. So sometimes it can discourage businesses to borrow. Instead, it will encourage them to offer investment opportunities or bond sales, okay, or stakes, so that people can be able to join as partners in their businesses. So it's just a mechanism the central bank used to control the supply of cash and also implement policies, because during the interest rate decision, they also implement some policies that will work hand in hand with the rates, okay, to control the civilization of the economy. So to be honest, if this hike happens, Japanese yen will be strong because a lot of investors will be investing money in Japanese yen. It is one of the safest assets in the world. So it's just like you investing like $100,000 and then you're getting some massive interest on it because of the interest rate decision has been increased. Okay, so that's just it. Then London session, we have the service PMI for Euro, service PMI. Just like I explained the Australian service PMI. Over here, a higher than expected figure should be seen as positive for Euro, while a lower than expected figure should be seen as negative. We have 49.3. Analysts are saying it could be 49.4. If this happens, Euro will be strong. Manufacturing PMI, the same thing. We have 41.9. And here you see 42.1. If this happens, Euro will be strong. Precisely France. Okay, this is my first pen for France. So this is positive for Euro. Over here, we have the service PMI for Germany as well. We have 51.2 against 51, which is bad. If this happens, Euro will be weak. Then we have manufacturing PMI for Germany, which is 42.5 against 42. If this happens, Euro will be weak. Then we have the Euro Central. This is where they have the European Union meeting, Euro Central. Manufacturing PMI, this is 45.1. And then they're saying that it will increase to 45.3. If this happens, Euro will be strong. And then the service PMI, they say it is 41.6 against 41.6, which is a neutral ground. Then we also have the Great Britain pound service PMI and manufacturing PMI as well those days. This is 51.1 against 50.6. If this happens, Great Britain pound will be weak by 10:30 a.m. West African time on Friday. Literally, this could be a trigger for us to be able to sell GBP/JPY again, because I have this gut feeling that Japanese yen will be massively strong on Friday. So this service PMI, if it turns out negative like we anticipate, for Great Britain pound, more sales. Probably, and the manufacturing PMI, this is 47 against 41.1, which is high for Great Britain pound. Then to wrap up the week on during New York session, we have by 3:45 p.m. the global service PMI for dollar, manufacturing PMI for dollar, Michigan consumer confidence, existing home sales, and existing home sales month over month. So first of all, we'll start with the global service PMI. I already explained it before. You have 56.8 against 56.6. If this happens, dollar will be weak. But if we get a figure higher than 56.6, dollar will be strong. Then over here, manufacturing PMI, 49.4 against 49.6. If this happens, dollar will be strong. But if we get a figure lower than this figure, dollar will be weak. Then we have the Michigan consumer confidence, just like how consumers in the United States of America feel. Okay. This is 74 against 73.2. Okay, so this is a reducing figure. When we see a figure higher than 73.2, it's going to encourage the dollar. Then we have the existing home sales. We have the existing home sales. Existing home sales are total amount of homes sold by real estate property owners. This is 4.15 million against 4.16 million. If this happens, the dollar will be strong. And this existing home sales month over month for December. This is 4.8% against 0.3. If this happens, dollar will be weak. So thank you so much for watching to this point. I hope you got value. Don't forget to smash the like button, subscribe, and share this content to your friends and family who are interested to learn about the financial market. Like you all know, my name is Anthony Phillips Ojoku, and I wish you a profitable trading week.